Is that going to be?
China, 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 China. They want to make a deal. The question is, do I want to make a deal?
We've heard US President Donald Trump talk about China many times. In fact, it was he who started the so-called trade war with China in early 2018, with tariffs piling up on both countries' imports. But is it a real war? And how much of it is impacting China's massive economy and its 1.4 billion people? I'm Kamal Santamaria here in the library at the National Museum of Qatar. Will this trade war between the world's two biggest economies have repercussions far beyond their own shores? We're seeking answers today as the president and founder of the Center for China and Globalization, Dr. Huiyao Wang, talks to Al Jazeera. Dr. Wang, thank you for joining us. Thank you for talking to Al Jazeera. I think for 18 months now we have heard this story of the so-called trade war between the United States and China. But we hear it mostly through the prism of the United States, possibly because Donald Trump shouts the loudest about it. But we certainly haven't heard much of the Chinese reaction other than when they put their own tariffs on. I'm interested to start by just, if you can tell me, how has the story for the 18 months played out in China? Is it a big deal there?
Well, it certainly is a big deal. I mean that, China and the U.S. relation, this year is exactly 40 years of diplomatic ties. China opened up in the end of 1978, and on January 1st, 1979, China and U.S. set up diplomatic ties. So China's largely opened up to the U.S. And actually for the last 4 decades, there's bumps, there's up and downs, but not as big as surprise as unexpected as this one. And I remember President Trump come to China in 2017, in November. He had a $250 billion deal signed. So you see, of such a high 10, 25, even 30% of tariff on such a big amount, $250 billion, or even $500 billion, or whatever, it's unprecedented. So they suddenly made the Chinese confused and also, very troubled.
President Trump will say, oh, we're winning here, we're winning the trade war, when in fact a lot of people in America are saying, no, we're not winning. Actually, this is affecting us as US business people. Is it, if we mirror that in China, is it having
I don't think there's a lot of economic impact. There could be some psychological impact. People just perhaps withholding from further heavy investing, or maybe rolling back a bit of the employment on that. But basically, I think both China and the U.S. are looking to a stability and to a deal that can mutually beneficial. So I think, but you don't see as described in China as President Trump that everything is a collapse, everything stock market is crash. No, I mean except the pork price has come up due to the swine flu. I mean you don't see any really major changes. No, you don't feel it. I mean there could be a little bit slowing down, but still China keeps maintain the 6.6% GDP growth, which every year adding another Australia to its GDP. So it's I mean, when China reached that kind of magnitude, and then still keep 6% of the original base of year after year, that's incredible. I mean, so slowing down is natural. You can't say China's slowing down from 16.5 to 6.2,
well,
or
yes.
is crashing, or it's still the best, one of the best in the world. So I think I have to, interpret how to interpret that.
Could China have reacted more aggressively itself? You start with there was the $200 billion, or tariffs on $200 billion worth of goods at a rate of, I think it was 10%, and China replied with $60 billion. And then again, another $200 billion went on at 25%, and China again only reacted with the $60 billion. Are they playing a long game there? Or
no, because proportionally, China's import in proportion corresponding to U.S. proportion of the import, that's where they exercise the tariff of each other. But China cannot match in absolute numbers with U.S. because China was not really that in line with U.S. in terms of exact the same amount of import of each other. The thing is that the Chinese market already a home market for U.S. The reason that U.S. auto industry, aircraft industry, and high-tech industry, everybody in China, consumer markets, everything, It's because China is buying a lot of U.S. product, and particularly a lot of U.S. companies investing in China, selling in China. So that's not counted as U.S. export.
Right.
So, but then they got all the benefit back. You know, like when President Trump announced the tax reduction, and Apple said they're going to, in a few years, they're going to repatriate back $350 billion U.S. dollars. So that's incredible. That's all the money they made overseas. So including China. So you can see, but that money probably is not counted as a deficit, trade deficit reduction for the U.S. because China may, you know, like an Apple phone, China may made $50 or $100, but it sells $1,000
for $1,000, exactly. Yeah.
But then China may have on its balance, they may take a $600 or $800, as if China made all the money of that. So it's not accurate to reflect the situation.
Another facet of the trade war was August of this year when the United States declared China to be a currency manipulator. Now, I think that's an easy phrase to throw around, and certainly, again, the White House has done that. Maybe you can just explain to us in simple terms what a currency manipulator is, and also does China fit into that mold, as it were?
Not really. You know, you have to. There's quite a few criteria that U.S. when they define a currency manipulator, and China is not matching any of those. You know, China actually didn't. It was still floating around 6.9, around 7, you know, per U.S. dollar of RMB. But that's not. You know, China did not drastically devalue it or do anything. You know, to do that. So I think it's inaccurate assessment of that. So I think to label China as a currency manipulator is not correct. So then how,
I won't say how does the US get away with that, but how are they just interpreting the data differently?
That's correct. I think that's very often now US is losing the credibility on that. Is because even the criteria they set on their own, when you match what China is doing, is not right. It's just China. There's 2 days China. There's a little inflation on that. You know, fluctuate a bit larger according to the market situation. And then the U.S. said, oh, maybe China is going to.
They saw that as
an indicator. But then you see now they don't say that anymore. So you see it's. China, you know, basically that is decided by the market. But Chinese government is, of course, going to not only allow the RMB to devalue it, you know, as what U.S. is thinking. No, not really.
So the picture I'm getting from you, as you've explained all of this so well to us, is that this is it's an economic versus a political story. The self-interests of two countries. It should be about the economics, but actually, is it actually more about the politics? Certainly coming from the American side, it's about political self-interest and where they want to position themselves against China.
Yeah, I think there's a bit of that, and I think U.S. was initially when they engaged China, they were thinking, okay, as we go along, our two systems will converge, will become the same. You know, China will, as the middle class growing, there will be more universal suffrage, and then they will have you know, similar system as U.S. But that's a bit of too much expectation. I think that, you know, in Oriental culture, in East Asia, in Confucius society, you have Singapore as one party, you have Japan. I mean, even Japan is a one party all the time almost. So China, you know, you have to really look at it differently with 5,000 years history. But if one, you know, if the government can really one 5 years plan after another 5 years plan keep the economic growth, I think the economic growth and the prosperity for its citizens is the biggest legitimacy for the government to probably to exercise the governance. And you see, for the last 4 decades, China has lifted 800 million people out of poverty. China has now become the second largest economy in the world. China is the largest trading nation for 130 countries. China in the last 10, 15 years, you know, build up the high-speed railway, the best, fast network in the world. The total length of that is equal to the next 10 countries combined.
So do you think this is all getting overlooked because it's become about trade and the trade? And I actually say so-called trade war because I think, you know, a war is a strange way to describe really what's going on.
Yeah.
But do you think that has actually overshadowed the rest of the Chinese story?
Absolutely. I think this trade war has, you know, they didn't look at the achievement the Chinese government and the Chinese people have working so hard to have. You know, that China now is a contributor of 30% every year of the world GDP growth. I mean, if we have become one of the strong locomotive of the world now, of economy. So if China collapses, if China really gets bad and not going keep it 6% above GDP growth, China could export famine, China could export refugees, China could become very chaotic. And then would that be an ideal situation for other countries? I don't think so. So it's really important to see that China, if really can do well, if they can lift 800 million people out of poverty and cut 70% of world poverty by percentage, that's, let it be. And I remember well, Deng Xiaoping, the late leader of China, said it doesn't matter if it's a black cat or a white cat, as long as it catches mice. So if this system works, in China based on its culture, its a tradition and its a heritage, so why not let it be? I think there's more out of the ideological misunderstanding, and there's not enough communication, and there's a lot of fear out of this. Then it all comes down to the trade war, and even for the trade war, there was a lot of misinterpretation because China wasn't really the beneficiary. For example, U.S. saying they got all the trade deficit, but on the service trade, U.S. has a big surplus. There's 1 million Chinese students studying in the U.S., contributed 20 billion a year. There's 3 million Chinese tourists tour around the U.S., contribute another 30 billion a year. And all those never counted. China also paying a lot of patents, paying a lot of IPR fees and things like that.
Everything you've described of China is really capitalism personified, and yet it remains a communist nation. Is that a problem for China? How does it operate two systems effectively?
Well, I think there's quite a bit of misunderstanding of the Chinese system. China actually is a mixed economy. Deng Xiaoping embarked on this market reform. China is basically a market economy. The government is, central planning is really getting, totally out of many, almost all the sectors. And then, you look at China composition. It has, private sector which employs 90% of the workforce, contribute about 60 to 70% of Chinese GDP growth. And then there's another maybe 10, 15 or 20% of SOE, contribute to Chinese GDP. And then there's another 10% of multinational. So it's really a good combination of private sector, some SOE, some multinationals. So it's a hybrid economy. You can say that it's a market economy, but with Chinese characteristics. So I think in that kind of system, it's stabilized. It provides all the employment to the citizens. But also, if there's a disaster, if there's a social responsibility, SOE can also take that not at a profitable level. So I think, and also China is going global, and also Belt and Road Initiative. That all comes together.
But I just wonder how long that can be maintained. And I know that sounds odd, given, as you've said, there's a 5,000-year history of the country.
Yes.
But I wonder, as we move more and more, and as this capitalist nature takes over more and more, won't it get to a stage one day when the people actually want a democratic country? They don't want it to be that mixed culture, mixed economy. They actually want it to be a fully democratic society.
Well, I think Fukuyama, the professor said that the end of the history, even he himself think that was a conclusion drawn too early. But you see, actually, even for the Western style democracy, it's not the same, and it's not really achieved what has been going on. You can see we've seen the populism. We see the Brexit for several years still hasn't been done. We've seen the yellow vest. We've seen all this recently unrest in Spain, in Chile, and in Middle East.
Hong Kong.
Hong Kong, of course, as well. So you see this kind of if it really totally rely on the so-called democratic movement, it's not really it's creating a lot of problems too. It's not a panacea for the problem. So I think that we have to bear in mind now the technology, the internet, the mobile phones, everything. It's creating a virtual or maybe a material democracy. For example, in China, 1 billion smartphone users every day. They're taking their votes, what to buy, where to shop, where to go, where to watch, which restaurant to dine. They are using their cellular phone to cast the votes every day. That's a market economy. And then also, on the other hand, China is watched by 200 some countries, United Nations, thousands of media, NGOs. they've been criticizing China. They've been pinpointing China every day. So Chinese leadership and also general people, elite in China, they know what's going on. They've been feedback by all those criticism and observers, of course, so that they can reflect. They can really respond. And also, China is really emphasized on the think tanks and the expert system, feasibility studies. China embraced the World Bank in a competitive bidding system. So everything in China is more internationalized. I don't see how and this kind of system is any different. So as long as people are really happy, and then as long as they are really getting an economic benefit, maybe there's a little bit of a social individual right, maybe not perfectly practiced. But China is a collective society anyway.
But is Hong Kong, I mean, I mentioned Hong Kong just in passing, is that a little bit of a wake-up call for China as well? Just a reminder of what people do sometimes want? And I know it's a different system in Hong Kong. This is what the whole issue is about.
I think you're right. The Hong Kong is because the one country two system. China let a free hand of Hong Kong and let Hong Kong people decide their own governance and future. But that's probably neglected the Hong Kong young people's desire, and that's so that Hong Kong young people felt the real estate price is so high they cannot afford housing. There's no job opportunity. And also, you know what? Hong Kong is also not really catched up on its new sectors and new development impetus. Hong Kong now actually used to, when they take over in 1997, Hong Kong counts about 40% of China's GDP. Now Shenzhen has taken over Hong Kong. So you see, so there's a bit of a gap, and also young people in Hong Kong make same now as mainland, but the same level they cannot afford living style in Hong Kong. So I think that's where the problem. I think the future for that is really to integrate Hong Kong with Great Bay, Guangdong Bay of Hong Kong, and then so that Hong Kong young people can cross the border, do work and marry and start up and go to university, and so they can social security and hospitalize, everything. That they can really solve that problem.
Let's look at China then in the context of the rest of the world. What did you say before the growth rate was at the moment?
Well, now is they maintain the latest is 6.2.
Right. So incredibly strong still. I mean, it's gone down from the crazy days of 15%.
That's right.
But it's still by world standards very strong. The International Monetary Fund's global outlook for 2019, they think global growth is going to slow to about 3%.
Yes.
And that actually this trade war between China and the US could be a large factor in that. Do you agree with that?
No, I totally agree. I totally agree. I was with Christine Lagarde last year at the Munich Security Conference, and also the new IMF chief, former CEO of the World Bank. We were at the same panel, and they made that prediction is absolutely right, because you see the thing about the China-US trade war is that it dampens confidence. It's actually make people reluctant to invest, and also people the value chain is hit on that, because China is in the epicenter of the global value chain. A lot of things goes through China. And then China is the #1 producer of 200-some products in the world. So if China is really hit by this trade war, all the other suppliers from other regions, from other countries, will all affected. And also, so in return, that will have affect the U.S. as well. So I don't see how the world economy will maintain such a strong growth and then become effective.
How dangerous is 3%? Given that we are only 10 years now since the start of the global financial crisis, if we're getting down to 3% again, how risky is that for quote-unquote global recession?
No, that's why I mean this partial deal that President Trump and China strike last month is absolutely crucial, because if we do not do that, I mean the two biggest economic power in the world, and then if they really fight, I mean all the others will suffer absolutely, and then we may drag the world into recession, and that's quite possible too, and we may not have another financial crisis, because this is really an alarming situation. I think that we should realize that we need to do that, but also even worse is that there are some people even in the U.S. thinking about the decoupling. You know, also we have a two-tech world and things like that. So we may have an economic Warsaw, we may have an economic NATO now. we can't afford the military war. Now they may want to get into economic war. And that's going to be very dangerous.
How would China weather any global economic downturn? Because there was a move probably more than 5 years ago, for China to turn away from exports and actually try and make its domestic economy, increase domestic consumption so that it could be insulated. Has that actually worked? Because that's a big ship to turn around, isn't it? When you've got a completely or a very strongly export-based economy and then you say, right, we want to start changing it, we want to make it more domestically driven. That's a huge task.
Well, that's probably happening because, you know, in the past, China was export-led and was really export-driven economy. Now China is really cutting down on that now. And now, for example, service in China, by the 13th five-year plan, by 2020, will almost 60% of the Chinese GDP. So the Chinese domestic consumption is greatly stimulated now. And also there's still more room for China to upgrade investment in its infrastructure. For example, a brand new airport was just opened in Beijing.
In Beijing, yes.
Yeah, so you see that China can use the stimulus package. China can really stimulate domestic consumption, which is 1.4 billion people itself. It's self-sustained.
Well, you've got an audience. I was going to say captive audience. That's not what I mean. But you've got that ready-made a population there.
Yeah.
China could effectively operate on its own.
That's right. China has 1.4 billion people. A very unified market. One currency, one system. 1 billion smartphone users. China is getting leaps and bounds into the new economy. You know, and then actually China already have 400 million middle class buyers now. We have seen the new Credit Suisse report saying that China has more billionaires now than the United States.
More billionaires than the United States?
Yeah, absolutely. So you see, that actually happened now, and then by the next 10, 15 years, China could have 800 million middle class. So in itself, China can, you know, survive it pretty well. I mean, China has, you know, if you're talking about category of production, category of all kind of products, China has the most product that classified by the United Nations. So China can be a self-sustained, well-balanced economy. Weather all the storms of financial crisis. China actually did very well on the last financial crisis, 2008. So I think that if China was really forced to do that, China can. But what China wants to do is China wants to contribute. China wants to say, let's do international, you know, multilateral system. Let's reform WTO. Let's do multilateral of Belt and Road. You know, let's work with World Bank, you know, ADB and everybody. AIB, you know, for example, is a good example of that. So I think it's really important that China and the U.S. work together. The two largest economies, if they fight, I mean, definitely the world is going to suffer.
Yeah, we are a year away, give or take, from a U.S. election, from perhaps the most definitive U.S. election we've seen in years. I mean, does this have the potential to play out for the next 12 months under President Trump, and then it could all change again, couldn't it?
I think that what President Trump has been doing in the last 2.5, 3 years is that initially this intelligence and military report that positioned China as a strategic rivalry now has spread across the board. I mean, everybody thinks China is a strategic rivalry. You know, we could be a cooperative rivalry, could be a healthy competition, but not a strategic rivalry. So if you really place China as an enemy of the U.S., and that's really dangerous. But I think what's more important is that President Trump still have a year left in the White House, and then what he has to deliver. Right? I mean, the Mexico-Canada-U.S. agreement still hasn't been ratified. And then what else? You know, he needs to answer his voters on what he has done for the last several years. So China is a big deal, a big part of that. I think he doesn't. The time is running out. I mean, let's get everything we have achieved. We can't do a perfect deal, but let's get, you know, if the 90% or 80% has agreed, let's do that. So I think it's really important that. We need to stop this downward spiral. You know, we need to really stabilize that, and then we need some progress, and we need to lift the confidence, and we need to, you know, get reinforced to have a better deal and a phase 2, phase 3, and let's really work for the best of the benefits of the mankind.
And that's what China wants. I mean,
that's absolutely China wants. Yeah, absolutely. China is, of course, China's never rocked the boat. I mean, China didn't start this trade war. China was really was really very a defensive position. But as the Chinese government said, China never afraid of the trade war. But China doesn't want to initiate trade war. They really want to peace and prosperity.
Dr. Wang, President and founder of the Center for China and Globalization, thank you for talking to Al Jazeera. It's been a pleasure.
Thank you.